Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about, can interest rates hit 4% this year? Is it possible that we can get back to or below that 4% interest rate? At the beginning of the year, I had a few mortgages that I did get settled at 4%, just 3.99%. But the market has changed, hasn't it? And what happened at the beginning of the year could be set to repeat itself. So in December last year, mortgages just weren't happening. Transactions weren't happening. The volume of sales was down significantly. The Bank of England had no indication on when they were going to cut interest rates. And so the bigger banks took it into their own hands to cut what we call the swap rate. That meant that banks that you borrow from and I borrow from, Barclays, HSBC, Halifax and all these kind of people, they reduced their rates in order to stimulate the market. And that did happen. So in January and February, the market was buoyed by these really decent rates. So I'm going to talk about whether I think interest rates could get back to 4% this year. But before we jump into that, as always, if you haven't done already, subscribe to the channel over there. Do it right now and hit the bell notification. We're probably at 25,000 subscribers already. If not, you can see how close. At the second I'm recording this, we are about 10 people away from 25,000. So do subscribe and hit the bell and smash like, tick or like, do something over there to that like button. That really helps me with the YouTube algorithm. It gets more views on the channel. So it means you're awesome if you do that. So interest rates. So the Bank of England obviously has held the base rate now 14 times. It increased the rate and it's held the base rate for 7 consecutive meetings now. And that meant that affordability on mortgages got worse, right? It got really, really difficult for a lot of people. But it is getting better. And so the reason affordability has improved is that house prices went down a smidge. But more importantly, people's pay rises were above inflation. And so when you get an above inflation pay rise, things get slightly more affordable. They're not where they were, but they are definitely moving in the right direction. And so right now we're in a limbo market. The market is slow again, like December of 2023. There are not many transactions happening, and this should be one of the busiest time of years. Now, there's a few things that are stopping transactions. Some people, not loads, but some people are waiting to see what happens in the election. I think we kind of know what the result is going to be. Labour's going to win, but what policies are they going to bring in? And does that impact purchasing property? So that's what some people are waiting for. The biggest thing that people are waiting for, though, is a drop in the Bank of England interest rate. That signals that we've peaked and we're moving in the right direction for interest rates to start coming down. Now, interest rates are not going to hit 1% again for a long time unless there's a real crisis, a big, deep recession or some other strange thing that's happened that maybe we can't foresee at the moment. But it doesn't look like interest rates will go down. The Bank of England have already said that they feel the Bank of England base rate is likely to settle at around 3.5%. Right, so that will be at 3.5%. But you really want to know about the mortgage rate, because that's what really you care about, because you're paying your mortgage, not this. And so I think that in the next couple of months that you will start to see sub 4% mortgages. But there's a big caveat to that. What I think is going to happen is I think you're going to see, like we did see this last year, we did see some sub 4% mortgages. In fact, we saw a sub 3% mortgage, but they were made up with huge fees, some as high as 7% fees, which is crazy high. And so that meant that the actual rate that you're paying was way more than 4%. And so that's what I think you're going to start seeing now is marketing from these lenders. And so they're going to come up with some clever strategies to get themselves in the press, because if one of them drops a rate to 3.99%, I guarantee all of the media will pick that up and feature it. So it's a huge millions of pounds worth of free advertising for those banks. And that's what they will do. But when you look at that rate, you're going to have to look at the fees. Now, do I think we could get to 4% with some reasonable fees? It's very, very slim chance of that happening. And if that does happen and we do get to a 4% rate, I do think it's going to be November, December at the earliest. And you would need at least two Bank of England interest rate cuts. And we were hoping that we would have had one by now. But obviously when Rishi Sunak called the election, that wiped out the June one. There's no meeting in July. And so we're likely that we hopefully will get one sort of drop in August, but it's not going to be big. The first drop with the Bank of England will be 0.25%. That's all you're going to expect on the first cut. All the central banks that have cut already have gone for 0.25%. It isn't going to make a big difference to the rate that you can borrow from. So what you want to start seeing is more drops. So 1, 2, 3 drops. If you start seeing that, in that scenario, you could start to see some rate cuts from the mortgage lenders again. I think the swap rates will go down once they start seeing inflation is finally beating them. We stop talking about it. And once they see both the elections behind us, I think that's just going to give us some more confidence so we know who's in power in the UK, who's in power in America as well. That's going to make a big difference. And I think that those sorts of things are going to drive rates down. So yes, you might get a 4% mortgage, but if you're waiting right now to get a new deal, to get a new mortgage, my suggestion is that you don't wait. I think your best option is to check the video that I made about potentially riding the tracker rates down. I wouldn't have done that a year ago, 100%, because there's so much uncertainty. I think now, if you could afford the rate to go up or you could afford a bit of volatility in there, a tracker rate is an option. So I would suggest going and watching the video that I've made on that. But I would probably not be waiting and holding out for a 4% interest rate. If I could get a 4.5 today, I would just take it. I would take that rate and say, you know what, next time I remortgage, it's going to be better than the rate I've got today. But it gives me the certainty on what my monthly payments are. And if you really want to save some interest, the 4.5 you can't really change, but what you could do is overpay that mortgage. And you can overpay most mortgages by at least 10% a year. And doing that will save you considerably more interest than waiting for a 3.5%, 4% mortgage. Let me know your thoughts in the comments though. Do you think that we're actually going to get some real 4%, sub 4% mortgages in 2024? I'd love to know your thoughts in the comments below. Do smash like, do share this video. I'm sure you know loads of people that are undecided what they want to do with their mortgage this year. So do share that with them here. Check out all the other content on my channel, including this video right here.